Wants to know when someone is self-employed and they don't pay quarterly taxes, what's the real damage?
It's a good question. The real damage is the underpayment penalty. And that's going to fluctuate every quarter. The IRS releases a new rate depending on the interest rates. Right now it's 7%. It accrues from the time of the missed estimated payment to the time of filing. We just had the Q2 filing. It's going to be roughly 8 to 10 months between now and the actual tax filing. So you're accruing daily at a 7% annualized rate from now until then. And so, how much does that matter? It matters. It increases your taxes by potentially an extra 7%. But how much value does that cash have in your pocket versus in the IRS's pocket? Because the real reason, when it gets down to it, is that you are paying the IRS in order for them to not charge you extra at the end. Depends on what you're making on that money, right? So if you use that money in your own business and you turn that, let's say, $1,000 into $2,000, then absolutely do that instead of paying the IRS $1,000 and not making the extra 1,000, right? It depends on what your use for the money is, depends on how risk averse you are. I've had clients who don't want to take deductions that they are even entitled to just because they feel like they would increase their risk of audit. It wouldn't, but some people feel that way anyways. If it keeps you up at night, then do whatever payments you need to make, allow yourself to sleep at night. But if you are more on the aggressive side and you want to say, I want to maximize the use of my cash in order to grow my business as fast as possible, and I'll deal with the extra penalty at the end, then okay, that's a choice you can make. And we're just here to advise about the different outcomes of different situations. As long as you're educated on the pros and cons of each approach, then I'm good with it. So yeah, that's the real outcome is a little bit extra tax on the end. And again, it depends on interest rates. Because I think it's prime plus 3 is the way they do it. But either way, they revise it every quarter. And as rates change, they'll change that 7% rate. So yeah, that's the upside and or downside. Now, if it gets to be an extreme level, they can do forced withholding. So that's the thing that's mostly for W-2 people. So I've had people who work at a company where their HR systems allow them to manually go in and adjust their withholdings. So some people put themselves as exempt for the whole year, make 100 grand, and then say, "Oh yeah, I owe taxes. I forgot about that." And in those kind of situations, the IRS can come in potentially and force withholding on the employer and say, "Hey, no matter what this guy says, withhold max amount on him as though he were single." That's mostly men who do that for whatever reason, in my experience. There's definitely a different risk profile for between men and women. But yeah, so that's the upside and downside.